Hello, and welcome to another sex, tax, all of those things, worker seminar for taxes. Did I say tax and sex enough times? I am Fox Riker. I'm a professional dominatrix, and I have been a sex worker for a little over 6 years. And I am here with my friend Jay.
Hello, everyone.
Hello, everyone.
There's only one.
Even if it's only one.
And Jay and I have been
yeah,
doing
so-
this sex worker tax information seminar series for a couple of years now. We did skip a year, but we're just excited to be able to bring information to people who often don't have the information readily available to them. Sex workers are highly stigmatized, and it's not easy for us to just find information about how to do our taxes. And Jay is an accountant, and he's going to be answering some questions that we got from when we asked for questions, and then also just things that we think you should know. If you haven't seen any of our other live streams, you can go back and rewatch the replays. Even if this is a replay, you can go back and rewatch the other ones as well. We have the ones from 2019 still available, and also all of the ones from this year will be available at goddessfoxtube.com. So without much ado, we're gonna answer some questions. We did more of a recap 2 weeks ago, and you can go back and you can watch that if you are looking for the lead into this. But yeah, here we are. And if you have any questions at any point and you are here live, you are more than welcome to say something in the chat, or just ask us whatever. And if you have questions after the fact, you can also send them, I guess, and we'll see if we can just get you some answers anyway. So so we had some questions. One of the questions was how to claim or deduct self-employment or business expenses.
Yeah, so we're launching
Right in here. So here we go. Right into the nitty gritty. So this is a question. Really, it's just like, where do I start? I want to do this the right way. I want to fill out my taxes the way that they're supposed to be done. Where do I begin? If I'm doing some work that's clearly supposed to be taxable, where does that go? Where do I put this information? So, previous sessions we talked about different tax structures for your business, but we're going to focus now entirely on the sole proprietor angle of things because it's the simplest, it's going to be the most common, and unless your business venture has grown into something, it's become a monster, chances are that's all that you really need to get done what there is to get done. So the answer, how do you report your expenses as a business? And the answer is they go on the Schedule C. Schedule C is the tax form for all things business related. It's got your income, your expenses, and ends with the net profit. So there's 27 different categories of expense on the Schedule C. And you just go through and pick whichever one is the best match for the expenses that you're claiming. So a lot of them are going to be things like materials or supplies, because those are easy catch-all. I mean, that is an easy catch-all kind of category. So if you've bought items for any of the endeavors that you have going on, it's a good place to put them. And I'm thinking, is there anything else about that to say? Because we've covered in previous videos, we've talked about that the thing to watch out for there is just picking a job code that would make the categories that you pick make sense. And that's pretty much the game. All right. So what's next?
So another question that we got was, extra forms that are needed for basic tax prep software. So so for example, if I'm trying to prep my taxes, like first of all, we did go over a little bit, I think at another point, what tax software you recommended. Yes. So what are the extra forms that are needed? So we've got Schedule C, and then what else is there?
Yeah. So
yeah, this is going on the assumption that one is using a really basic tax prep software. I'm not super familiar with tax prep software because I don't use them myself. But let's say that it's really just designed for like a homeowner, and you've got to supplement it with the stuff to cover your business stuff that you do. All of your stuff you do that brings in income from your own endeavors. So, already mentioned the Schedule C. If you are reporting a profit on the Schedule C, then you'll also need to fill out a Schedule SE, which is the self-employment tax. And one of the things I went into 2 years ago was talking about why the SE tax exists. It just makes it equivalent and fair to people who work in a wage-earning job where there's an employer withholding stuff from their paycheck. So it just makes everything the same. So because you are your own employer, so you've got to act as both the employer and the employee. So Schedule SE takes care of that. And that's assuming that those forms aren't part of the software. They may well be part of the tax prep software, but those are the ones you'd have to look for, make sure that it is using, if you are indeed using that software to report your all of your tax matters, all of your tax stuff. And let me just tag on to that, specifically about the self-employment tax that you are using the Schedule SE to calculate. Unfortunately, it's not a deductible business expense. Can't do a feedback loop where the federal taxes that you're paying reduce your federal tax. If you're itemizing your taxes as an individual, not as a business, you can claim your state and local taxes as a deduction. And again, that's not a business deduction unless your business is actually paying taxes as its own entity. But federal taxes, nope. There's no place where they.
Situation in which a company would be paying taxes as its own entity. Like if I were to incorporate my business differently, would that be something I would need to do?
Well, you'd be talking about literally incorporating like a corporation, like the companies that have INC at the end of their name. And those are standalone tax entities. For the stuff that we've addressed in the last video and the ones from 2019, the highest level of I guess complexity is the word I'm looking for, that we went to was an S corporation. It's a little odd that the terminology is so similar, but there's a world of difference. An S corporation isn't actually an entity. A business, it isn't a taxable entity from the IRS's perspective. It's just a pass-through, and so whatever the net profit is from the S corporation, it just gets reported as one avenue of income for the individual. So that also doesn't result in any business tax. But let's pick an example of, say somebody has a long-term facility that they rent. I don't know, running a dungeon out of someplace other than your own home, maybe. That would be paying property taxes and whatnot, and those would then just be business expenses. But they would be just one of the expenses reported on. So I just had to catch myself. Like, chances are you're not talking about a Schedule C. If you're to the point of renting property, you may no longer be just a sole proprietor reporting expenses on a Schedule C.
Well, let's say
But
that
again,
I was just a sole proprietor and I had a separate space that I rented that was just either my dungeon or my film space or my cam room even. Like, I do know, like, there are a lot of cammers that don't cam out of their own home, and they do have like an office that's like space that they've rented to do that separate work.
Most of the time, the expense that one would be reporting, and this would go on a Schedule C, is just rent, office rent. Because most of the time, taxes for a property are just part of the rent. That's the landlord pays the taxes. They just pass it on to you in the rent. Supplementary charges that the landlord also may charge to the tenant. But yeah, then those are just regular expenses to report, like your advertising expense or your cost of supplies. And I think that will probably cover just about anything you're likely to encounter up until you're
and we're
talking about
do you have any
way more
like
complicated.
specific advice for people? We have talked about this before, I know, but just because, do you have any specific advice for people in the realm of keeping under the radar with how they're categorizing things?
The nice
thing is, as I said in our last live stream, the categories are really broad and vague. So there's not too much worry about what's in the category. That would be something that if you actually did get audited, you might have to defend if they even asked down to that level of detail. Sometimes even in an audit, sometimes they don't ask much detail. They may just say, can you show me your evidence for this dollar amount? And you can just say, here it is. Here's my spreadsheet showing all the 127 receipts that comprise that one expense line. And be like, oh, okay. Yeah. To your point, the thing to avoid is wildly disproportional amounts in any particular category for whatever that type of job code. And we've talked about the job code before. And unfortunately, there's no guidelines out there about what is reasonable, because that would be the IRS giving its game away. That's like Google letting you know how its algorithms work. As soon as you know how it works, it'd be too easy to game the system.
They don't have control anymore.
It's like letting people figure out how to get away with something, and nobody wants to let somebody else get away with something, so that's why
unless they're benefiting
keep
from
those
it.
secrets.
So we actually just got a question. Aurora says, I was wondering about the safe harbor rule. I always worry about getting everything 100% correctly on self-reporting, and I've heard that you don't need to stress that much.
That is correct.
You do not need to stress that much. The guidelines are, if you, where my brain is going is like, do I talk about paying estimated taxes, or is that not as important to this conversation? The broad guideline is, if you pay 90% of what you owed the previous year, okay, just hit me. Why was I thinking about estimated taxes? We're talking about what you pay if you were making estimated payments to just stay current with your tax liability, or if you're paying an amount at the time that you file for an extension. Because unfortunately, if you file for an extension to pay your federal taxes, you have to pay a close estimate to what you would owe at the time you apply for and it has to be by the original deadline. You don't get an extension for the time to pay. You just get an extension for filing the paperwork. But you only need to make it. It only needs to be 90% of what you owed the year before. And that covers your safe harbor, so that you will not get penalized if there's a slight difference then. Obviously, if you know the amount, it's better to pay the full amount. I again, I'm thinking now. It's like, arcane situations where, yeah, no, but I don't have enough information to follow that trail that my brain just went down. Yeah, so they really aren't so concerned with the precision. In fact, that's across the board. It is astounding how not precise the IRS is looking for numbers to be. They just want their money. And they want most of their money, and they want their money when they want it. Speaking of which, going back to the point of the estimated taxes, I do highly recommend getting on track with making the estimated payments. There's one good thing that I discovered for myself many years ago. If your income is sporadic or seasonal, or you're just getting your business venture rolling and it's the first half of the year didn't produce anything substantial, you don't have to make estimated payments in even division. You don't have to pay 25% with each quarter. You can pay proportionally to when you earn the money. And also, Aurora, specifically to your question, if this is about starting up a new endeavor, you also are not obligated to make estimated payments in that first year. Which is good news, because you may have no idea what you're likely to owe at the end of the year. So that's good news for anybody out there who is starting up something new. Then you're talking about, can I rely on myself to have the nugget when tax day comes around and the taxes are due? Can I count on myself to have that money set aside to pay the taxes at that time? I know for me, my first year reporting self-employment income, when I calculated my taxes and I got that number, I was like, I don't have this money. I was not counting on that. I earned so little money, I thought there was no way I'd still owe something. But being self-employed, it's like, yeah, it still added up. I couldn't pay it at that time. That was also several decades ago. So since then, I've been able to stay on top of it. And that actually taught me my lesson for that point in time. It's like, oh, I've got to count on that it's going to be a hit on April 15th. And so from that point forward, I was able to make sure I had the money set aside. And people use all kinds of schemes to make sure they've got them. You can use a separate bank account. I've heard far more people talk about having a separate bank account to set aside the money than the number of people who ever actually got it to work. But anything that works for you, as long as you know it's coming, that's the saving grace. It's like you can handle anything as long as you know it's coming.
For sure.
Oh,
since I've been mentioning tax due day, let me toss this in there. You may or may not have heard, everybody out there, the IRS and all states that use the IRS deadline, they've postponed the 2021 date for taxes being due to May 17th. So it's not April 15th this year. Thank goodness, because they've been jiggering around the tax laws, particularly related to COVID, and things changed just in the last month that are definitely going to be relevant to what your final tax burden is. And again, that's mostly as an individual, not so much as a business.
But that affects sole proprietors.
But
Well, definitely.
I mean, because in the end, anybody who's a sole proprietor is also paying taxes as an individual. So those matters are an impact. For example, for myself, I never got the second stimulus payment. Don't know why. Nothing in my situation would have indicated that I wouldn't or shouldn't have gotten it. But it just hasn't shown up. Never got it in my bank account. I got the first one and I got the third one. So there's a new line on the tax forms, which is the, oh shoot, do you remember the name? the something recovery credit.
Ooh, sexy.
The word that's coming to mind is resource, and that makes no sense. Oh, jeez. Welcome to my brain. There's something in there. I know what it is. I know it's in there, and
That's
it's not coming out at
mood
this
of
moment.
all time, though. You're gonna remember it. You're gonna remember. We're gonna talk about something else, and then you're gonna remember it. So actually, and on that note, did you remember it?
Yeah.
Oh no, you're just miming
Yeah.
you're pre-acting as if you remembered it.
Exactly.
I understand completely.
Exactly. That's how it's going to come out. Yeah. So, but anyway, there's a line on the tax form now specifically to claim a credit. It's a straight up credit. It's not a reduction of income or anything. It's straight up dollars you would get, and you get it even if you owe no taxes, or even if you owe a very small amount of tax. But anyway, it's straight up credit. So I'm looking to file and get that $600 back after I file my taxes in the first week of May, because I'm not giving up my money any sooner than that. I don't have to. I'm not gonna.
Can't make me. So with actual gifts being sent, is there a certain value or threshold to worry about? Small gifts that are under $100 seem so insignificant when reporting income is the next question.
Excellent question. And I'm running this through a bunch of different scenarios in my head right now, because the first one that came to mind, I was like, oh, wait, we're not talking about 1099 payments from a business paying you. I had an answer already for that. I think the answer really goes back to what we elaborated on in the last video, which is, are they actual gifts, as opposed to payments with an expectation of receiving something in return, even if the expectation is for something intangible like companionship, a listening ear, any other kind of service. I mean, other services are a little more obviously a service. But if there is no expectation of anything being received in return for that gift, then it's
or if you
not
can
taxable.
argue that there is no
And you're
expectation.
Right. Yes. Yeah. And that it's also referring to a point we've in other videos, that so much of this comes down to not what's on paper, but what you could testify to if it ever went to tax court.
Can you do that again, please? I need that in my life again.
Yes, so you've just got to be ready in case you ever go to tax court.
Oh my gosh. I love you so much. Is that going to be on our album?
Yeah, so that's... Oh, now we're going to have a
court.
podcast and an album. Okay. I resigned myself to my fate.
I only blame myself. Oh my gosh. Wow. You're my favorite.
All right. Anything else? Any other follow-ups about that?
Well, did you remember that thing from earlier? No. So the question was in regards to a television. So it seems it was clearly a gift, but it's so hard to know these things. I think they don't care about my TV realistically. I mean, just, I would say personally, as not an accountant, it makes more sense to just have it be a gift, because if they're sending something to you and there's no written agreement about it, it was never like, I'm sending this to you in order to, you can if it were ever to come down to it, you could very clearly argue that there was never an expectation for that gift, and that therefore it was a gift, and therefore it's not necessary to. Am I saying anything that you disagree with, my beautiful accountant friend?
That was beautifully said. Yeah. The other thing is, let me frame it this way. When I've done bookkeeping for my own clients, my goal wasn't to be absolutely literal, strict, and even necessarily totally truthful. My goal was to make their books audit proof, meaning there would be nothing that would be noticeable as something odd. And then I sing about receiving a gift of an object. While it technically could be something you would have to count as income if it were clearly given in return for a service. But if it isn't clear, who would even know it exists? There's no paper trail. So it's like, if you know that it was received in exchange for a service, you'll be above board by reporting it. The fair market value again is the test. Reporting that as income, you'd be above board. But really, it's like, and that's actually going back to how little detail the IRS actually cares about. It's like, chances are you're already talking about something, as you mentioned with the size of the gifts. Like, that's not what they're after. They're after people just not claiming entire income streams. People using really improper, bizarre maneuvers to try and get out of paying their taxes. None of us are likely to be in that category. We're just down here saying, look, okay, yeah, I mean, I know I'm supposed to pay my taxes, and I'm answering the question. It's like, well, what is it you would be paying your taxes on? So, not to worry. The bottom line is,
I feel like if they're getting their money, they don't really care anyway.
Oh, good.
Like they just want to know that they're getting some money from you. I feel.
Yeah.
Like,
and that actually pulls together a couple of threads and things that we've touched on, which is how to avoid an audit. One of the key things is reporting some income. It's like they're the categories of things that are most frequently audited: people who make lots and lots of money, and the people who report making no money at all. Especially if there was a gig for which one got paid from a business, in which case you get a 1099 for the money that business paid you. That copy of that 1099 went to the government. The government's like, well, we have proof here that you got paid for something. How come you aren't reporting any income? That can happen. I mean, you could actually have enough expenses that it eliminated your tax burden, but it's like, yeah, you don't want to open that can of worms. That's why you just want to report something. And that'll probably be all you need to keep yourself out of trouble. All right.
Oh my gosh.
What else we got?
How's our stream doing? Did this just boot us off?
I'm still seeing it coming through on my end. Yeah.
We'll find out. I don't know what just happened. I just lost visual for a moment.
Oh my. Well, you're still visible on
Nice,
my feed
cool.
from
Well,
YouTube. So proceed
cool.
as if
Well,
all is well.
Until
that's
that
the
no
theme of
longer
today.
works, let's ask some more questions. So we've got oh no, we're back. All right. Looks like
Okay, good.
I just lost it for a second. That's funny. Okay, so
We all lose it
but I'm
from
glad
time
to
to
know
time.
that the stream keeps going if I lose it on my end.
That is good to know, yes.
So
That is good to know. Yes.
I mean, as long as you're still seeing it, then we're good. Okay, cool. We're good. Wow, that was very interesting learning things about YouTube. Cool. Awesome. Okay, so we had some questions about different sources of income, having multiple different sources of income.
Perfect.
And what do you do when you are
What do you
trying
do?
to when you're
Exactly.
yeah, what do you do? What do I do if I make money different ways?
So that's it's a great question. And I'm in this exact situation myself with the little bit of self-employment stuff I do on the side. The answer is you do a separate Schedule C for each very different kind of income stream. We keep using the examples of, say, consulting, if you're doing any in-person work, or modeling if you're doing something that's just like a visual presentation, whether it's camming or live performances or whatever it might be. So modeling, consulting, they're two very different things. If you actually do something that resembles both, split them up, put it on two separate Schedule Cs, and use the job code for each of those different things on each one of them.
How many?
Now it gets a little tricky. You do have to keep track of your
most?
expenses separately then, because you're going to have to report them separately for the two things. That might be the thing that makes it an extra challenge for people. Like, it's easy to say use two different forms, but it means you have to have two different trackings of income, two different trackings of expenses. But that would be also a way to avoid closer scrutiny, because it would have the overall expenses more in line with what the IRS is expecting to see for those two different types of work. And you were saying?
And what if like, so okay, so for instance, let's say that somebody is working at a dungeon and then also working with a burlesque troupe and then also working like, you know, as a cam artist and then also working as a model and also doing all these things with like how like you're just saying like do a Schedule C for every single one?
You can lump together any ones that are similar in flavor. Chances are whoever is in this kind of situation knows that what they're doing falls into very different categories. And that would be the time to take on this strategy. And again, going back to my beginning point about what was my beginning point? I saw.
Welcome to our show.
And poof. Off
This is
went.
it. This is what you get. This is what you get when you
The
hang
train
out
of
with
thought
us.
left the station, and I wasn't on it.
And welcome to the promo for our podcast.
Gosh. Yeah, I can't wait until I go back and watch this, and I'm like, you fool! It was the thing about the stuff! Why didn't you remember that?
It's always the thing about the stuff.
Came back to me. Yay! It's about knowing in advance what's coming. So this is a thing, it's like, don't worry so much about what happened in the past. If you know that you're going to be doing things that fall into very different categories, then you can start keeping track of things separately. So it's like, I've got two side businesses. I do landscape designs and proposals, and I do bookkeeping consulting. Radically different. I keep track of the income of each of them separately because, you know, they're coming from completely separate groups of, you know, completely separate client groups. My expenses are squat. My expenses are mileage, and that's pretty much my only expense. So I have to keep track of the mileage separately for each of those two businesses. That is actually a little more challenging. Not so much that the keeping track is challenging. Challenge is going through the list of all the mileage that I've driven and picking out. It's like, okay, here's the part. This one was for that client. And then, you know, 2.5 months later, now this one was for the other client. So whatever system you've got that can keep track of things for, you know, whatever works for you is what it comes down to. But I know that all in advance. So I've got little codes and notes I use, and the thing I use to track my mileage. So I do have it written down, what I'm doing, and I try to get it into a spreadsheet on a regular basis so I don't have to do the math, and also don't have to wait until It's like, oh my gosh, my taxes are almost due. I've got to record everything. I've got to tally up everything now. Well, that is usually how it goes anyway.
So, I'm sure no one feels called out right now. Like 0 people.
I am you. You are me. We are all.
I am the walrus. Cuckoo.
So yeah. So knowing in advance that that's an approach that one can take, then you can set up the stuff to have it work for you, to be able to keep track of those things, and then you should be able to say, okay, this was for my, my in-person appearances work. This is for my, I don't know, just photo shoots or something. I say in-person work, and I'm like, well, crap, it could all be in person. So that was a lousy distinguishing category. Oy.
I like the word lousy. Good choice. So,
right. Yeah.
So, let's see what's next. I just completely lost my place. Do you ever look at text? This is, it's so funny. Today's just one of those days, I think. Do you ever just look at text and it's just words?
Uh-huh.
Okay, so
I'm looking at this, like, I've got some notes, and
so
we've covered a lot.
Like, if you're reporting at a loss, is it like directly problematic?
Yeah. Okay, this is a good one. Yes. I think we've actually had several inquiries about reporting losses and what are the issues around that. I think I went into more of the deeper cut of that. I think it was in our first video 2 years ago. But the short version is, it's not a problem to report losses. You just have to watch that it's not always a loss. So I've been told that the IRS, for new businesses, the IRS pretty much expects that you're going to operate at a loss for a number of years at the beginning of the undertaking, the endeavor. So rules of thumb, this is probably one of those things where the IRS won't actually let on what's the thing that will raise a red flag. But I've heard various things. One of them is they expect maybe 3 out of the first 5 years of a new business, to claim a loss. Then that's as good a rule of thumb as any. So if that is happening for you, and when you're just starting up something, no problem. Again, not to worry. The issue would be is if it's continually losses year after year after year, then the IRS is like, how are you saying that this is a business and that you can claim these expenses as a business? It sounds like you have a hobby.
Probably a very
if you're not
expensive
making
hobby.
enough income.
If you're having such losses, it's probably a very expensive hobby. You invested a lot in your hobby. Good job.
We could be talking about very small losses too. We could be talking about somebody's only reporting hundreds of dollars. Right. Big whoop-de-doo. Now, one of the things about losses, in some circumstances, the loss can be used to reduce other reported income, especially if you're a sole proprietor, because you and the business are one taxable entity. So there, in the federal world, losses in one category can offset income in another category, which would be like if you're working, if you have a regular wage-earning job and you've got a side gig, and if the side gig for some reason is losing money, if you're a sole proprietor with that side gig, you can just reduce the total income. There are other tax categories, though, where you cannot. What you would have to do is carry that loss forward to a future year. There's special places to put that carry forward on the tax forms. And as you get more complicated, there are certain restrictions on doing that. But really, we're talking about the simple end of things. So for the most part, you can carry that loss forward, and you can, if it means there's a loss the next year, then you can carry the cumulative loss forward to the year after that. And like I said, at some point, you're going to have to start showing some net profit to show that it's actually a business. And there was another thought I had back there. Oh, we know this is dangerous territory. Me trying to.
You're having thoughts? Oh no!
Oh.
Everyone run for cover.
Evidence may be scant, but yes, I am. Oh yeah. There's one thing I had a note here for myself. Thank goodness. The more losses than the rule of thumb that I've talked about can increase your chance of being audited. But if you've got the records to prove, yes, I do produce income from this line of work, it's just not enough to offset my expenses. And yes, I can justify the expenses, then you're good. Like I said earlier about making the records audit proof. If for some reason you do actually have that many losses and do get called in for an audit, if you've got the records to prove it, you're fine. No problem. So that would be just another thing. Also fits in the category, if you know it's coming, you can be prepared for it. So that's why the records are important. All right. But yeah, that's it. The goal is to prove that you have a business, not a hobby.
For sure.
All right.
And that you are paying something or not, maybe.
Yep.
Like you're telling them that something happened. The end. That's what they want to know.
It's like, don't worry. Eventually, you'll get your money. You're going to get your money. Don't worry.
So, for some non-business questions, what if I want to request an extension? What do I do? Or if someone wants to request an extension, what do they do?
Yes. As I mentioned earlier, you still got to pay a decent estimate of the taxes that you'll owe, and you have to pay that with the request to extension, but there's just a tax form. So you just look up the IRS form for request for filing for a request for exemption of the time to file. And fill that out, send it in with the estimated payment if one is likely to be due.
Is that going to be different this year since they changed the deadline?
There is, frankly, where the problem comes in is the states, because every state has different rules. In fact, like I mentioned about the taking a loss and offsetting other income with it, many states don't even let you do that. They're like, sorry, suck it up. You had a loss in your side business, you eat the loss. You don't get to reduce your other income. That's normal for state tax rules. So when it comes to filing for an extension with states, currently I'm aware that there are some states where they still want their estimated payments by April 15th. And frankly, even the federal government, if you already have an established plan making estimated payments, the first estimated payment is still due April 15th. Having nothing to do with paying your tax burden. That's, and also to clarify, I just realized that it's not at all clear. When I said an already established estimated payment schedule, I'm talking about the plan that was created when you filed the previous year's taxes. And it was clear that you needed to begin making estimated payments going forward. That's not the estimated payment for the previous year's taxes. So those are two different things, and I realized I was being sloppy in my terminology there. So when you file a request for an extension, what you're paying the estimate of is the prior year's tax burden. If you are making an estimated payment, a scheduled estimated payment, that's a payment for this year. It's a payment for the 3 months that just happened, not last year's tax burden. And so that's why that is still due on the same deadline, because it's not a paperwork deadline. It's just, you got to just keep, like I said, they want their money, and they want their money on time. So it's just sending them their money on a regular basis so that it's flowing in. That's mostly what they care about. So yeah. But the tricky part is then estimating what you'd have to pay with the request for an extension to keep yourself out of trouble. And, you know, Aurora brought that up earlier, safe harbor, and then we covered that. So a reasonable estimate, and you'll avoid trouble. It's like, even if they want to charge some interest on the difference, I'm not 100% sure that they would for a circumstance like that. You won't be in any trouble. It's like, you made a good faith effort. They know that people can't, you know, magically know their whole tax burden without having done all their paperwork. And if they did all their paperwork, they wouldn't have needed to file for an extension. So yeah, you got some leeway. Once again, not to worry.
It's just taxes.
Send them some money. They'll be happy.
So what happens if you move partway through a year?
Excellent. Very good question. No impact, essentially, for the federal government, of course, because they don't care where you are in the U.S., but it will affect your state filing. And the way to do it is you just file a state return for each of the two, if you, this is presuming you move between states, because if you moved within the state, who cares? Well, it doesn't change anything. You know, unless you move to a place that has local taxes, local income taxes. My town just started local income taxes this past year, and I'm like, grrr, it was so nice and simple with just property taxes. Now you want income taxes too. Anyway, if you move from one state to another state, you fill out a tax return for each state, and you know, if most of the time, that's when somebody has, you know, an income, regular income that's switching, let's say, from maybe, it depends whether they're switching a job, and that's why they're moving from one state to another. Or if there was a short distance, you know, just to hop across state lines and the job isn't changing, chances are you can pin the date when your income changed. You know, you can say this dollar amount was earned in that state, this other dollar amount was earned in the other state. And that's how you fill out the two tax returns for the states. You just report the amount that you paid when you were a resident of that state. And again, as long as you get the total right, who's going to argue? It's like, well, you know, I was back and forth between the two states, you know. Occasionally I would sleep in the new place, occasionally I'd sleep in the old place. But once again, what's my mantra here? Not to worry. So just put down, you know, a split that is close enough, and you'll be golden.
So let's say I'm a sex worker. Let's just say.
Let's say
that. Why not?
What are you talking about?
So I'm a sex worker, and I'm about to do my taxes, and you are giving me a pep talk. Go.
Wow. Didn't see that one coming.
Blindsided. All right, let's do it. Pep talk me. Pep talk the people doing their taxes, about to do their taxes.
It's like, you can do this. No worries. Whatever you put down is fine. Whatever you omit inadvertently, it's fine. As long as you have shown a reasonably good faith effort. That's the word I'm looking for. As long as you've shown a reasonably good faith effort to do what there is to do, you'll almost certainly have no problems and receive no guff, have no flack, get no troubles, likely no audit. So, not to worry. You got this. Use software if that makes life easier for you. Do it on paper if that makes life easier for you. You know, for as much as I work in spreadsheets and programs and software all day, I do my taxes entirely on paper. And that way, it's like I can look at it at a glance and pull it out when it's like, oh wait, I need this number for over here. So you just do whatever works for you. And chances are, whatever works for you works for Uncle Sam, or whatever you want to call the states, too. Anti-Pennsylvania. Because they aren't worried about the super fine level of detail. So, give them the money. They'll be happy. You got this. Yeah, how was that?
That was great. I mean, wow. Truly inspired. Yeah.
Wow.
I wish I could like throw roses and shoes at you, but you know.
Oh. Boom. Ow.
You know that's like a thing,
I
right?
feel
Like dancers, they like throw shoes. They throw their shoes at the dancer, like on the ground in front of the dancer.
Well, I'm glad they're not pelting him in the forehead like I just
dodgeball.
did.
Yeah, I think.
If you can dodge a wrench, you can dodge an uncomfortable tax question.
Yeah, I think like generally, the advice would be don't take it so seriously.
Yeah.
Like, you know, if there were an issue, then they would take you to tax court.
Tax court.
And then you would argue for whatever your case is, and then your case would be made, and that's it, you know. So I think.
And you know what? Let me just elaborate on that. The stories I've heard about what people have succeeded in proving in tax court blows my mind.
Number one, and number one or number two, the top two.
What blew my mind? One I talked about, and I think it was the first video, the guy who claimed that the legal costs for defending himself in court for embezzling money from his employer were a legal business expense. No, I'm sorry, not legal. Were a legally deductible business expense because the embezzlement was a source of income for him. And they accepted it. They said, okay, you know, we may not judge the legality of your income stream. We're only judging whether or not things are legitimate business expenses, and legal costs are legit. And even though they were for defending yourself from your guilt in embezzling money, yeah, that's legit.
Okay, number two.
So I think that one, that one blew my mind. Oh shoot, there was another one. I just came across it briefly once, so I don't think I've got the details of it. Although we also talked about in the first one, Chesty Love, successfully defending her. What were they? They were like
enormous.
They're like 64 triple N's
like
or something like that.
Huge boobs, just like ginormo tiddlittles, you know.
And she proved in tax court that they were a legitimate business expense and they were not suitable for personal use, which is crazy because, you know, how much more personal can it be than something that's part of your body? But she successfully proved her case that no, there was no aspect of these enormous boobs that served her in a personal capacity. They were strictly for business and for producing an income, and she proved her case.
Yeah. And it's legit too. I mean, like, you know, there are a lot of, like, people always are making fun of me because I'm like, oh, I gotta buy more lingerie, you know? And it's like, honestly, I don't know, like, lingerie it's like not exciting to me anymore, you know? I think, like, the thing about lingerie that's exciting to most people is that they don't have a ton of occasions to wear it. But if you're wearing it all the fucking time, it's like no longer exciting. Like, now I'm excited when I get to wear sweatpants. You know, like, I'm not excited when I get to wear lingerie. I'm like, oh, I'm working. Cool. So when I buy lingerie, it is very clearly a business expense, especially since if I were ever in some sort of court, I could argue, I could be like, listen, I haven't had sex in like 2 years. What are you going to do? Like, like, if I was buying these for personal reasons, then there'd probably be someone else involved, right?
Yeah, it's like if these are for personal use, I'm failing miserably. But of course, you then touch on, some larger topics. It's like, yeah, the whole thing about lingerie. Who's it for? It would be nice if it was for the wearer.
Right.
Chances are, in our culture, not
Right.
so much. Which is, of course, why we're here, talking to our community here.
Yeah.
It's like we're talking about stuff that exists in this culture because of, well, let's just say the way
Right.
things are or have been. Well, topic for the podcast.
For the podcast. Oh my God. Listen, we're making a podcast. It's happening. Y'all heard it here first. Actually, you heard it 2 weeks ago first.
Yeah.
And
I hear
we don't know what it's gonna be about yet. It might not be about anything. It might just be us talking. So whatever. If you're interested in hearing more of us talking about things that are not taxes, you can, or if you're just interested in following anything that is happening with the sex worker tax information seminars, which we're probably going to do another one again next year, or if you are just interested in learning more about me, Fox Riker, internationally known dominatrix, you can find me on any social media at Fox the Goddess, FOXTHEGODDESS. You can also find me at worshipfox.com. That's also where you can find all of my business coaching and kink coaching, and you can schedule anything like that. If you have any questions about your taxes between now and the end of tax season this year, feel free to shoot me a message on any social media. If I cannot promise I will see it, but I do promise that if I do see it, I will make sure that you get some kind of answer to your question. So, if you are interested in more things like this, definitely let us know. If there's anything else that we can do for you throughout the year to make you feel more prepared, let us know. And if there's, we just really care about people, and we really want people to get what they need. And it seems like there's a lack of just free options for people to get questions answered, sex workers specifically, to get their questions answered about doing their own taxes, without hiring somebody to do that for them. So we're just, we just want to make as much of a difference as we can, and that's why we're here, and that's what we love to do. That's why we love each other. So, I'm Fox Riker, and you can find me other places. And this is Jay, and he's my friend, and he's an accountant. And Jay.
And at least one special shout out to Sierra. Thank you. You were invaluable for us in this endeavor. Thank you so much.
Shout out to my sis. Shout out to my sister for being just honestly my number one supporter, my number one cheerleader, but also very helpful in the creation of these live streams this year specifically. Let's shout out my sister. I love my sister.
Yeah. And shout out to you, Fox. Thank you. I love you. I adore who you are in the world.
Yeah, same to you. Same to you. All right, so before this gets too gay, I say with my giant rainbow penis behind me.
Not gay enough.
Before we go, is there anything else that you want to say? Anyone else? I mean, you're just amazing. I mean, seriously though, I mean, it's like there are very few people who actually have information about these things, who are willing to work with sex workers at all, let alone give them the information for free. I mean, I don't know of any other people who have this information, who are so readily available and willing to share it and interested in sharing it and interesting in just giving people the tools that they need to do what they need to do themselves, instead of you having to do it or someone else having to do it. And I think you're stellar.
All about the empowerment. Yep. Getting everybody empowered to be able, and a lot of it, empowered to do it
Yeah.
yourself. Like, I know you can do it.
So thanks to everyone who has watched this. If you're watching this on the replay, please drop a comment. Just like tell us, something that you liked about it, maybe, or just an emoji or something, or just something. Share the video with people so that they know that these tools are available, and have fun with your taxes. Have it be something that is fun for you.
Shocker.
Try and make it into a game for yourself. Like anything to make it feel less serious and less heavy and something that stresses you out. Light some candles, drop a bath, and put your tray with the iPad or laptop or whatever. You know what I'm talking about? You just do a foot bath and go through your whatever. I don't know. Just I'm just spitballing here, but seriously, if you're finding yourself getting really upset or stressed out about your taxes, or finding yourself having large amounts of anxiety about your taxes, there's nothing I can recommend more highly as the anti-anxiety than fun. Fun is just, if you make a game out of it, it's going to be fun. And if you bring fun to something, then you can't be stressed out. And I'm a firm believer in that. So when I'm stressed out, I just make it fun. And if you're having trouble making it fun, maybe you can talk to your friends and find some way to make some sort of fun, competition or game or something with your friends about doing your taxes. So,
after all, it was fun that got us through these live streams.
It's fun that gets us through everything. So that's on that note, I think, enjoy. And if you have any questions, let us know. Again, it's Fox the Goddess, FOXTHEGODDESS, or worshipfox.com. You can also email me, foxthegoddess@gmail.com.
Stretch, tweet.
It's time to hydrate.
Hydrate.
It's hydration time. And on that note, I gotta go hydrate because my beverage is in the other room. So have a beautiful day, everyone. No matter what time of the day it is, I hope the rest of your 24 hours is phenomenal. And do something good for yourself. Be nice to you, and I will see you soon.
All right.
Bye.
Bye.